All right, happy 2022. It's been a really interesting first few days. Bitcoin has been really hard to figure out. So we wanted to sit down. I wanted to talk with Omar and kind of get his take on it. So Omar, what is happening with Bitcoin right now?
Excellent question. I get this question pretty much every day. Part of the reason why we're doing this video is so that friends and family can hear from me all in one shot.
Everyone, this is the phone call you're getting, okay?
Yeah, and also very interesting. I think people are seeing it. People that haven't been into Bitcoin are seeing this as an opportunity to buy. So I've literally in the past week had 5 different people, different connections around the world that are buying Bitcoin for the first time. So bravo to them. Where we stand right now, we're standing at a point where, just the summary is it's a good time to buy. 40,000 appears to be the new 30,000. And I think the reason for that is because...
When you say 30,000, you're referring to the dip that we had over the summer, is that right?
Exactly. We had, after China banned mining, the price went down. We called it that 30,000 was going to be the lowest it would go, that we might see some spikes below it, and that ended up being true. So we got that call right. And then we had a couple of months of really exciting news, futures ETF, a lot of excitement around Coinbase, a lot of new things that were happening in the crypto sphere. NFTs were becoming very popular, so a lot of real interest came into the market. So we saw the price go up from there, up to 69,000, and we've come down since then. And right now we're around 43, 44,000. So 40,000 appears to be holding. And I think the reason for that is because a lot of those new buyers that came in, or even convicted long-term holders, are holding onto that Bitcoin because they're starting to understand it. They're starting to understand the volatility. And so they're less likely to sell their Bitcoin on a downturn. So it looks like 40,000 is that level. Will it hold? Big question. It seems to be where we stand right now that we've probably seen the bottom. Hard to say. I think if we do go below 40,000 is probably going to be because of some kind of catalyst. The inflation concerns are priced in. The rate hikes, the Federal Reserve announced that they're going to be making 3 rate hikes in 2022. That's been priced in. So, my gut is telling me that we see some upside from here. We'll see what happens. The bear market is still intact from a fundamentals perspective. I'm going to get to that.
The bull market.
I'm sorry, the bull market is still intact. Fundamentals are all there in terms of on-chain activity. Let's cut to. I want to show my screen now.
Cool.
And I want to show one metric. I could drown you in metrics, and that proves that the bull market is still intact. But I think the most telling metric is this one, and this is called entity adjustment dormancy flow. Very fancy name, but I'm going to explain it in layman's terms. Dormancy flow refers to how strong the long-term holders of Bitcoin are holding onto their Bitcoin. So a way to think of it is hardened supply. How likely is it that they'll be shaken from their Bitcoin? You can look at historically it's this metric, and we are in a period right now where the dormancy is very low, which is a good thing. What makes dormancy spike? It's when you have a lot of old-time holders of Bitcoin sell their Bitcoin, in mass. And because the way the metric is calculated, it takes the number of Bitcoin, the quantity of Bitcoin, times the age of that Bitcoin, and it prints that on the graph.
So those moments might be when the price is really high. You might see that actually happen, right?
You see that when the price is high, you might see those spikes, but you also see it when there's a capitulation, right? When you see, the price is going lower and lower. Finally, a lot of those old-time Bitcoiners are like, I can't stand this anymore. I'm going to sell my Bitcoin. You'll see a spike.
Because they're already so in the green at that point anyway.
Yeah. And, if we look back throughout time, if we go back at least a couple of years, we see that right here, we had... this is right after 2020. This was the COVID crash. So we saw that the most, it hit this zone where dormancy was really low. People were holding on to their Bitcoin. There was a lot of movement of Bitcoin at that time, but that Bitcoin was really being bought off the exchanges. If you remember back in March 2020, COVID lockdowns were announced. All the markets really seized up, Bitcoin included. Bitcoin was actually, I think, in a matter of 35 days, we saw a 55% downturn. Price went from 10,000 to about 4,000. And it was an opportunity, if you managed to get in at that time, it was an opportunity to really ride the bull market for all it was worth since March 2020, about 2 years ago now. So we saw massive asset appreciation in Bitcoin leading up to when China announced that they were banning mining. We saw the downturn there. That was around May of 2021. And we hit this green zone, and that was another really good time to buy. That was when the price was around 30,000. And so we saw, again, it went up from there, and here we are at 40,000, another period of time where the dormancy is really low. Again, people are holding on to their Bitcoin. These tend to be more sophisticated, experienced investors in Bitcoin that are, we can think of it as creating a price floor, where it would really take some really strong catalyst to separate those holders from their Bitcoin, which means that we have a lot of upside from here. So that's the way I'm reading it. So that's fundamentals. And now I want to talk a little bit about the macroeconomic headwinds. And anyone that's really following, the economy realizes that the economy is very much driven and, heated up or slowed down by the Federal Reserve. And so over the past month, the Federal Reserve announced that they were going to be raising rates in 2022 to try to tamp down inflation. Inflation is a serious problem. Inflation really causes, socioeconomic issues that no administration, particularly the Biden administration, don't even want to deal with going into the 2022 elections. So the Federal Reserve is under a lot of pressure to try to tamp it down. What tools do they have in their arsenal to be able to do that? Raise rates and raise rates or take assets off their balance sheet. And they're doing a little bit of both. So 3 hikes this year. First one expected in March. I think that news has been priced in to all the markets. And then as far as what they need to do in terms of the balance sheet side, they've already announced that not only are they not adding any assets to their balance sheet, they're starting to take away assets to their balance sheet. So the way I look at that is, they're going from pressing on the gas really hard to try to, stoke the economy and get the economy going, to now slamming on the brakes. The Fed is in a very tough position. They have to really walk this tight wire, because if they raise rates too aggressively, then credit markets seize up, or credit markets start to become a lot more scrupulous in who they lend money to. And businesses that don't have strong valuations aren't going to be able to get credit, or they might have difficulty getting credit, or they might just consider that credit might be too high, and it affects their bottom line. They may start laying off employees or not hire employees. So it could have a ripple effect on the economy if the rates are too high, which is, the other thing that the Fed has to consider is, for a lot of Americans, their number one asset is their job. So they got to be very careful about how they kind of walk that tightrope. If they don't raise rates, then the fear by the Fed is that inflation is going to continue, unabated. And again, not a good situation. So it's really about walking that fine line, a very difficult task. It's very complicated. All this data that the Fed has to kind of gather and look at is incredibly complicated. So we'll see what happens. Again, low rates, high asset allocations, high asset prices, asset inflation. Higher rates, you get a hit on assets, but it's really intended to be good for the middle class because it tamps down inflation.
So these economic headwinds you're talking about, have they traditionally affected Bitcoin much, or is that kind of a new thing?
It's funny because Bitcoin was released in 2009 as a response to the global financial crisis, when the Federal Reserve had some unprecedented, they called it quantitative easing, and just they backstopped the market. And it was a response to that, just like Occupy Wall Street was a response to that, and a Tea Party on the right was a response to that. So we saw an incredible amount of Fed printing from 2008. In 2015, the Fed started to try to raise rates, and the markets just wildly, rejected it. The prices of assets started coming down. You name them, stocks, equities, and Bitcoin was already in a bear market at that time. So it's really hard to correlate whether Bitcoin really, suffered as a result of those rates going up. But the Fed immediately reversed course, and they kept low rates up until 2020. And then in 2020, again, they just, unprecedented printing, trillions and trillions of dollars of new money in the market, which saw Bitcoin go up. So how Bitcoin performs in a deflationary period, the way I like to think about it is in terms of certainty. In uncertain times, people want to rush to trust. They want to rush to certainty. Historically, that's always been gold. Will businesses, will institutions go into Bitcoin to try to protect from a deflationary spiral if they consider it to be a path to certainty or a certain asset? You can have a scenario where that could happen, but one man's risk is another person's value in human error, right? My view of Bitcoin is it's incredible value. It's net risk zero, because you can invest in Bitcoin and you can understand Bitcoin and you can use it to kind of go in and out of it based on whatever your particular needs of the moment are. But everybody sees Bitcoin in a different way. Institutions, if they see it as certain, they're going to buy it. If they see it as risky, they're going to sell it. So it's all this, it's a confluence of different views on the asset coming at a time where there's a lot of uncertainty for many. So I'm really excited to see what happens with it. Ultimately, though, deflationary times are not good for any assets. But how Bitcoin will perform, if you put $1 in Bitcoin versus $1 in the S&P 500 or $1 in bonds, I believe, my personal view is that your dollar will go farther in Bitcoin because it's also a global asset. And it has open access to everyone around the world. Some places are seeing rising inflation despite what's happening in the United States, like Turkey. You have Lebanon, you have countries all over the world that are really struggling to, find assets that will protect their purchasing power. And then you also have the situation in the US. So how these kind of confluences of factors play together, very hard to say.
Interesting. Okay, well, it'll be an interesting 2022. I know that. And check out our website, sascodigital.com, to get in touch with us, and we'll see you in the next video.